But first, we've got new records on Wall Street. The Dow hitting an all-time high today. Any gain today is going to mark its third straight record close. So we're going to be watching for that. Now, stocks climbing for the seventh week in a row. The Dow, the S&P 500, the NASDAQ, all up more than 2% for the week, in part propelled by the Magnificent Seven, as they're called, which have seen incredible gains this year. Tesla up more than 100%, NVIDIA up 230%. Also, you've got J.P. Morgan now saying that there is more room to run in some of these names, predicting Amazon and Alphabet will run another 20% next year. Making Money host Charles Payne joins us now. Charles, always good to see you.
You too.
You've got this narrative on one side that I just laid out. You've also got the Wall Street Journal this morning talking about the headline, the most crowded trade on Wall Street. They're talking about the Fed. The Fed is expecting Jerome Powell to cut next year pretty aggressively, right? I think it's more than 82% roughly right now are thinking you're going to see your first cut in March. Goldman Sachs chief equity strategist, Peter Oppenheimer, he says this. He says, quote, talk to investors, and there's this strong sense that we get through this rate cycle without any major accidents. It may still be a bit naive and premature to believe that. So who's right?
We're not sure. I mean, that's why this is one of the most I won't say perplexing, but certainly intriguing points that I've been involved in a long time, because you're really still not sure, because no rate hiking cycle of this magnitude has ever ended without a disaster. We're not talking about weak housing market.
Right.
We're talking about, major things going wrong, being completely annihilated, and major significant pain. In fact, the odds were that we'd have at least 2 million additional unemployed folks by the time this is all said and done. That we're nowhere near that, and some of the other things. Again, it's been rather remarkable so far, but I do also think that maybe, just maybe, Powell was a little premature with his victory lap. His body language was a little bit too excitable, I think, this week, because there's still a lot of variables out there.
I mean, it was a victory lap. Let's just be clear. For a Fed chair to say what he said, the way he said it, I know it doesn't look like he's out there cheering and everything, but that's a victory lap. That's we're ready to cut rates victory lap.
That was a man like, you know what? Yeah, I blew it on transitory, but I did something no one thought I could do. So give me a break lap. Okay.
But maybe just a little bit too premature. I want to ask you about this, though, Charles, because I'm so interested in the ongoing automobile saga.
Right.
Okay. And one of the problems we have is the UAW got the big victory in wages. Workers got that wage increase. But nobody talks about the rest of the story. What's happened since? We got more news today about job cuts from GM, their Cruise unit. That's gone because they've had problems with Cruise. They're cutting the Camaro, which saddens my heart. I love Camaros. But my bigger point, Charles, is you're seeing layoffs, delays in productions, plant delays. It's the rest of the story in auto and those jobs in the U.S. How are you reading that? Because I know you're a guy who goes beyond the headlines.
Yeah. I mean, listen, I think there's a couple of stories here. First of all, supply and demand. I really think the real big story here was that these automakers committed too much money and too much time to EVs. And this is where they got caught flat-footed. And this is where they're making major adjustments, pushing back. And, listen, it's one thing to say the strike cost us X amount of money, and we're also going to buy back $10 billion worth of stock.
Right.
The general public hears that as like, well, then if I am accepting any additional pain, it's still to a large degree coming from the sweet. But if there was a demand for the Cruise, if there was a real authentic demand for those things, they wouldn't stop making them. The bottom line is they really blew it. They spent way too much money on EVs, and now they're regretting it.
Yeah. See, and that's one of the issues when you look at the broader markets. I think that the article in the Journal was pointing out, they're saying this market's really ahead of itself. There's no growth there next year to support it. So what's happening in the auto industry is one example of where we're losing ground here. And so that's the kind of stuff that I'm worried about and watching in 24.
Yeah, you know what? 24, my thing is I really believe this lag effect is going to be a lot more impactful. It's slow then sudden, or whatever the old Hemingway quote is. It's like we're like this and then we just fall off a cliff kind of thing. And I'm with you on that being premature. I do think the Fed was premature. I was shocked. I mean, listen, I'm long. I was 90% long yesterday. Only had 10% cash, but took some profits into strength, because there's three ways I like to look at the market: fundamentally, technically, and behaviorally.
Right.
We're in the behavioral part now, and the behavioral means catching up. The frenzy. And the frenzy is amazing, because that's when the market goes parabolic. Look at the S&P. If you guys put up just a 2-week S&P chart, maybe a 1-month S&P chart, that line straight up, that's parabolic.
Yeah.
And it's a fun thing, and it seduces people off the sidelines. But if you're smart, that's when you start to sell. Look at what Warren Buffett has done this year.
Yeah.
Warren Buffett just sold almost $30 billion worth of stock. He's sitting on $157 billion. He knows something. The Oracle knows something, and so let's just be aware of that.
But it's like musical chairs. You just need to be sure you're not the last person.
That's why it's okay. That's why it's okay. You know what bothers me with a lot of investors when you leave when they perceive you left money on the table. Hey, we sold it at 165, and today it's 168. Ho, ho, ho!
Right.
Hold on, cowboy. We ain't gonna pick the exact top.
Well, speaking of leaving money on a table, there's a new policy that's coming out from Congressman Khanna, Democrat from California. He wants to ban lawmakers from making trades, not just the lawmakers, but their spouses too, because concerns about conflicts of interest.
Right.
You know, potentially wide-ranging because, as according to the New York Times, this could impact 97 members who reported trades recently involving companies that were influenced by their own committees.
Yeah.
I'm wondering what your thoughts are about this.
Everyone else does that. It's called insider trading, right?
Yeah.
It's Gottheimer in New Jersey. I live in Jersey. Gottheimer, he's one of these guys who trades all day long. What bothers me is, like, if you do 300 trades, how the hell are you doing the people's work? How do you have time to do both?
He trades all day long.
All day.
All day long. That's not hyperbole.
And some people are saying, okay, his net worth went from like $5 million to $15 million in a short period of time. You know, it's the perception of of having insider information. Also perception of maybe, you know, you have an allegiance to big businesses.
Sure.
Because, you know, when you leave office, you maybe go work for one of these firms to do consulting.
Right.
I don't understand why
this is
so right. This is it's got to stop.
Yeah.
I would say 90% of things that Ro Khanna talks about, I disagree. He's a gentleman. He's a nice guy. On this one, though, I agree with him 100%. Why? Just having a money manager do something for you, you know, just own the S&P.
Yeah.
Just
Nancy
own
and
it.
Paul Pelosi, perfect example. Oh, my spouse did it, so it's okay.
Yeah.
Right.
It's just too convenient for them to always be right. Wink, wink.
Right.
You know?
Right.
Yeah, I thought it was interesting coming from Ro Khanna because the Times pointed out that he actually completed more trades with more companies than any other member of Congress in recent years. So.
Yeah, but Ro is rich. So, like, you know, he's one of these rich guys. If you're going to let him do it, listen, there's a lot of people out there that know things are wrong. But if it's legal, they'll do it.
Yeah.
It's legal, he's going to do it. But I think in his heart and mind, there's two things he's got going for him. Well, one, he's very rich. So he doesn't need to trade. He doesn't need to, but if you're going to let him take money, free insider information, he'll do it.
It's the insider piece.
It's the insider piece.
Yeah. Well said, Charles Payne. Always
Thanks a lot.
pleasure to see
Thanks
you.
a lot. So great to see you all.